Hey everybody, Rob Maurer here, and today we are talking about an updated Tesla note from Alex Potter of Piper Sandler. We'll also take a look at Tesla's inventory position, got some news on Tesla's Giga press in Texas. We'll talk about the producer price index and more. Quick look at the stock. Tesla today down 2.1%, closing at $128.78, while the Nasdaq was down 1.25%. So a little bit of an underperformance there, kind of a weird day for the stock and the markets overall. Nasdaq and Tesla both starting in the green, ending in the red. I think starting off with a positive reaction to the producer price index PPI report this morning, and then maybe some Fed commentary causing that to fall a little bit. But in general, I think the data is more important. I think the Fed tends to use commentary as a tool in and of itself to help keep markets in check, help keep inflation lower. And I think the data that we got this morning for PPI was relatively positive. So if we look at the headline number for PPI, we can see that year over year, the index increased 6.2%. That is pretty significantly lower than consensus expectations of a 6.8% change year over year. On a month over month basis, we actually saw the index decline by 0.5%, also pretty significantly lower than consensus expectations, which were at about 0.1% decline. So those headline numbers, I think, looking really good. Core, probably even a little bit more important. So excluding food and energy, core PPI increased 5.5% year over year. That was a little bit lower than expectations of 5.7%. And then on a month over month basis, finally, core was up 0.1%, which was in line with expectations. That is the lowest month over month increase that we have seen in core PPI in just over 2 years. If we look at how a month over month increase of just 0.1% annualizes, that comes out to about 1.6% on an annual basis below the 2% target. So that is really where the Fed wants things to be and wants to see consistency at that level. If we look at that number annualized over the last 4 months, each has annualized below 3%, and the average over that 4-month period comes out to about 2.3%. So we are starting to see lower numbers and consistently lower numbers, which is a great sign for inflation and in turn reflects positively on the actions that the Fed might need to take in terms of interest rate adjustments this year. I think with what we're seeing here in the PPI report, as well as what we talked about last week with some encouraging signs in the CPI report, I think there's a very compelling case to be made for pausing rate hikes, but I think the Fed has concerns about what sort of signal that sends into the market, and then if that has a self-fulfilling prophecy of sort of bringing some inflationary type of environment back. Plus, jobs data, unemployment data still seems to be relatively unconcerning for the Fed at this point, so I do still expect in February in a couple weeks a 25 basis point increase in the federal funds rate at that time. All right, so moving on from the PPI report into Tesla stuff, we've got an updated note from Alex Potter of Piper Sandler today. He has reiterated an overweight rating on Tesla, albeit lowering his price target a little bit from $340 previously to $300 per share, which was attributed mainly to the price cuts that we have seen. However, he says that now the pricing adjustments have been made and now that the valuation has been reset, we think investors should be proactively buying Tesla. 3 points warrant particular attention in our opinion. First, we think Tesla can easily achieve 50% plus delivery growth in 2023. Potter says that they think in the US alone, price cuts and the $7,500 tax credit could boost demand by 300,000 to 600,000 units. Second, they say that while we are cutting our gross margin forecast to reflect lower pricing, we wouldn't be shocked if margins surprise to the upside in 2023. And finally, we think the self-driving software business is quote-unquote free at this valuation. So on the first point on the amount of incremental demand that could be unlocked by these price cuts, they share a couple of charts that explain why they are confident in that analysis. They show the original pricing for the Model Y, the price cut impact, and then the $7,500 possible tax credit impact, and where that moves Tesla's pricing on both the Model Y and the Model 3 relative to other vehicles in those segments. So Piper Sandler basically saying if the Model Y can capture 5 to 10% of the volume in that lower price segment, that should be 220 to 445,000 incremental units in 2023. Same thing for the Model 3. They say should be 82,000 to 165,000 incremental units there. Now, I think that probably assumes that the market stays relatively similar to how it is now, but of course, in 2023, we may see significant declines in general in the automotive market. Still, both of these charts make it extremely clear that the Model 3 and the Model Y are both the most compelling vehicles at their price points. So when they drop to lower price points, there wouldn't be much reason for that to be any different at those price points, and that obviously drives the incremental demand that they're trying to put some numbers to. As far as margins go, they've got a note in here saying that everybody is bearish, but is it justified? They say that their estimate for 2023 automotive gross margins, excluding regulatory credits, is now 24.7%, which wouldn't be too bad. That would be down 235 basis points, about 2.3% from their final estimate for 2022. But but they also say that they're hopeful that such drastic declines may not materialize due to deflating raw materials costs and better margins in Tesla Energy. And they say that even more importantly, we suspect that the margin profile of new capacity in Shanghai, Austin, and Berlin is higher than many expect. I hope that is the case as well. The one thing that is for sure is that we're about to have some really interesting quarterly reports. There are just so many unknowns right now that make it difficult to forecast for anybody. We'll get some insight on some of those unknowns in the Q4 report and the earnings call, but we may need to wait until Q1, Q2 until we really start to get a better understanding of how Tesla is shaking out this year. Remember, Zach specifically called out on the Q3 earnings call that there might be a little bit of a lag time between commodity prices coming down and that actually getting reflected in cost of goods sold, just like we had the opposite scenario occurring when prices were increasing. So 1 week from today, we'll get the Q4 earnings report. At least we'll know a little bit more then. This is usually the time that SAY opens up questions for the call. Doesn't look like they have done that yet, but something to keep an eye on that may happen later today. All right, next up, I just want to take a quick look at the inventory position for vehicles here in the United States. I think this is worth keeping an eye on right now as we kind of assess the impact of the price changes. Before we talk too much about it, I do just want to start with the important caveat that this is just one data source, and I don't view this as the be-all, end-all indicator of Tesla's demand or anything like that. But I do think that it's helpful enough to keep an eye on. So if we look at Model 3 and Model Y inventory levels according to Matt Young's data here, this is just coming from listings on Tesla.com in the United States. We can see that after the price cuts, inventory dropped significantly from maybe 1,900 vehicles down to about 500 for the Model 3 and the Model Y. But at least yesterday, we did actually see this tick up. So the actual numbers here, 510 on January 17th, 542 on January 18th. Now, do I care that Tesla has 542 vehicles in inventory? That's like a couple hours of production. I don't care about that at all. The raw level of that inventory is completely inconsequential. It's not a problem to have that amount of inventory. That's not at all what I'm saying. But the concern that this data might show is rather related to having inventory after such a significant price cut, where you would expect a huge spike in orders that is not going to be sustainable because you're just going to have that initial spike and that's going to taper off as time goes by. So if that initial spike doesn't clear the inventory, then what happens when that spike is gone? Same sort of stuff that we talked about back in October and November for China. Furthermore, if we look back in December, we can very clearly see when Tesla did the $7,500 discount. That was around the 21st, 22nd of December. Inventory after that dropped from 1,000 vehicles to 50 vehicles in just 3 days. That's just not the exact scenario that we're seeing here in January. In December, it cleared the inventory out. In January so far, it just has not cleared the inventory out. Again, not necessarily a problem to have any inventory, but I guess with such significant price cuts, my hope would have been that that would have cleared inventory out just like it did in December. Now, maybe for whatever reason, Tesla is sort of deprioritizing fulfilling orders from inventory. They are going to have to kind of manage a little mini delivery wave this quarter because of the federal tax credit changes that are potentially looming in March. So maybe they're trying to put as many new orders into the production queue as they can and just leave as much inventory out there as they can. That could potentially help with that sort of wave that we might expect to see this quarter. So I think something like that could be a plausible explanation. In terms of the remaining inventory too, if you look at the Model Y, it's primarily inventory above that $55,000 cap. So that could be seen as a positive in terms of the inventory, but at the same time, you do have buyers that are going to be ineligible for the credit anyway because of the income caps. So the vehicles that are priced slightly above that, those still have seen significant price reductions and should still be significantly more appealing to that group of buyers. And I think ideally you would like to see that appeal be to such an extent that those price cuts would generate enough new orders to clear through that inventory. And then for the Model 3, you still have plenty of inventory that does fall below the $55,000 cap. I think 4 out of the 7 in my location were below that level, so fully eligible for the credit. As for the Model S and Model X, of course, both vehicles were always going to be ineligible for the credit. But looking at the inventory, you'd hardly be able to tell when a price cut happened. On January 11th, there were about 700 vehicles listed. Now on January 18th, there are 750. So again, not so much about the actual number of vehicles. Overall, it's still a low number, but I think the trends are interesting and worth watching and probably not exactly what I would have guessed on the eve of the price cuts. So I would definitely welcome people's comments on that, be curious to hear, but again, just please keep in mind some of the caveats that I mentioned. Oftentimes people choose to overlook those types of things. All right, moving on, we've got another quick check-in from Joe Tagmeyer on the progress of the GigaPress 9,000 ton being assembled at Giga Texas. We continue to see progress here, what seems to be relatively fast progress. I'm sure there are a lot of things here that we won't and can't really know about in terms of that process, but it's definitely starting to take form, look a lot like the shots that we have seen of it from Idra over in Italy. So I continue to be really excited by this. Just keep in mind though that we did talk yesterday about some of the comments from Franz that definitely make it sound like a little bit more than 6 months out for production for the Cybertruck. So although we see this going up, please just kind of keep that perspective in mind. All right, last few things here. Opening arguments did commence today for a jury trial for an investor lawsuit against Elon Musk and Tesla regarding the funding secured saga, which I mostly bring up because it's going to be in the news. There are going to be testimonies, and those testimonies will lead to more news. So we'll see what comes out of that. For now, I'll abstain from speculating on how the case wraps up, but I will say that whatever the result ends up being, it's likely going to end up in a lengthy appeals process anyway. Next then, I should have mentioned this yesterday, but Xpeng has cut prices pretty significantly in China on the P7 sedan, the P5 sedan, and the G3i SUV, all by somewhere between 10 to 13%. So pretty significant price cuts here, and a sign that Tesla, I think, is putting some pressure on these companies. Probably have to do a little bit more research on their margins, but I would imagine that that puts them in a very, very challenging position after those price cuts. Last item then, I've gotten a number of messages, comments on people saying that they can't find the videos over the last couple of weeks. If you're on YouTube and you're on the channel page, there's going to be 2 tabs that house the videos. It's going to be number 1, videos. That's going to be for things that were not live streamed. And then there's also the live tab for things that were initially live streamed. Since I do both, if you're accessing things from the channel page, just make sure that you're aware of that. Otherwise, you're obviously going to be missing a big chunk of the content. I obviously don't have any control over that user interface, but hopefully that helps. All right, that is it for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Thursday, January 19th episode of Tesla Daily. Thank you.